Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today's Friday, June 3rd. Happy Friday to you all. Hope you have a wonderful weekend coming up here, especially since it's been a kind of short week, so it's been kind of pleasant. Hey, big economic news releases were scheduled today. We had the non-farm payroll. Very disappointing, only 54,000 jobs when they were kind of expecting at least 125,000. So the stock market really kind of took a beating there. It was actually down 100 earlier. It's kind of pulled back a little bit so far this morning, but this is not great economic news, and of course it's creating some jitters, as well as March and April's reportings were actually even worse, than about another 39,000 jobs. So those are actually revised lower for more jobs created. Unemployment rate, they thought it was going to drop a little bit, like another 8/10, instead it went up to 9.1%. Again, folks, as I've been saying along, those numbers didn't really seem like reality out there when we were talking the last couple months, and sure enough, now the revisions are coming out, and predictions or speculation is coming to fruition, so to speak. So, anyways, good news is that our average hourly earnings, let me spit that out for you guys, kind of came up a little bit, 0.3%, so people are getting a little bit more than what they were, probably to keep people there after they're losing probably 2-3 people's jobs now. That's why productivity's been kind of up. ISM services sector went up a little bit, but again, still not great levels right there where we need. Now, next week's gonna be a pretty quiet week. We have mostly likely be headline news. We'll have like the beige book, the Fed beige book coming out on Tuesday. We'll have federal budget on Friday, wholesale inventories on Thursday. Of course, the jobless claims, that's going to be something I would definitely be watching every single week for a while now, as a lot is concerned about we might be heading into another double dip recession here. Headline news this week or today is Greece actually looks like they're concluding some of their talks with the trifecta over in Europe with IMF, the European Central Bank, and basically European community. So they looks like it ended on a positive note. So there might be some more news coming up, any conclusions, but look like they're kind of briefing up their meeting over there, and maybe have some type of conclusion, some type of positive news coming out of there. So we'll see. It's kind of a mess right now. They're not the only ones. U.S. here and a lot of other countries are also having some issues as we see our debt keep continuously growing and the dollar getting weaker. Notice the oil prices, earlier in the week, kind of went up about 102, 103 level. I noticed today it's dipped up just under $100. So let's hope that continues dropping down a little bit. Some of this has to do with the strength of the dollar kind of gaining against the euro a little bit because the news of the Greece and some of the debt crisis going on over there, so the dollar's kind of gained a little bit in those news. But again, and the quantitative easing too about to phase out, so the dollar, is kind of improving a little bit on that. So, anyways, let's go ahead and take a look, see what the bond market is and where interest rates are heading. All right, folks, so here's the bond market here, and as I mentioned, that huge opening gap that we did on Wednesday quickly got closed yesterday. So I told you there was some concern that having that opening gap that at some point will probably get closed, and it looks like it got closed yesterday here. But then today we had another huge opening gap up 47 basis points. We started up 47 basis points where we left off yesterday, and that's pretty big. Left a huge opening gap, and that quickly got closed. Now, with economic news that was reported today, I do anticipate that to actually have a nice run up. I think we could reach the 102 here very shortly. We're starting to see a more of a normal market after with the QE2 winding down here. We're starting to show signs of a market here, so some normalcy here. So basically, when bad news means bad news, and good news means good news, that's how we're starting to see that in the markets now. Where before it didn't matter if it was good or bad news, the stock market kept going up, and we're starting to see as a result that stock market's starting to recognize this. So, but rates, I expect the rates to get better. Rates will be better today than it was yesterday. We'll probably be more on par what it was on Wednesday. And don't anticipate this to be down shortly. I do, with the economic news, think it's going to probably work its way back upwards and close up as we may blow past this or may just stop at that, and then maybe next week. Next week will be a short week. I mean, not short week, but it'll be less volatile week. It'll be a little bit kind of a breather for the market and probably be more headline news. And after they digest some of this information after a short week this week, they might just kind of react more to the bond market. So I do expect to see a run up on at least up to the 102 level here very soon. All right, folks, you guys have a great weekend, and see you Monday. And folks, I'm also a loan officer. If you're looking for a mortgage in the state of California, I can also help assist you. You can check out my other websites here at obviously at Mike's Daily Market Report and MikeBjork.com, even CaliforniaMortgageTips.com and the Mike's Homebuyer University.com. I have some great resources there. But feel free to give me a call at 310-694-3544. I can do refinances, and I also do purchases. So I can help you get pre-approved to buy that next home here. So thank you, and keep me in mind.